All right, everybody, welcome to September 3rd Zoom. I am going to be pre-recording this one just because I have a lot to do today, and I want to get started as soon as I can. But who knows, maybe I might start pre-recording a lot more of these. Not all of them, that's for sure, because I still want to talk to you guys live in case you guys have any questions, any concerns, anything of such. Excuse me. So let's go ahead and get started. So right from what pretty much updating what happened after Tuesday's price action, which was relatively around here, I believe, yeah, right around here where we were on Tuesday. We were anticipating a potential premium to then anticipate a continuation to the upside. Unfortunately, that didn't happen. And as you can see, we pretty much took liquidity, caused an internal liquidity grab based on a solidified high based on preliminary break of structure after taking liquidity, making this an internal bearish liquidity grab. And as you can see internally, that caused a bearish mitigation from, it's a bit tricky, but let's see, from a M15 wick and M5 candle. So that bearish mitigation led to bearish order flow, resulting in bearish momentum, right? As you can see, structural disruption here, push to the upside, continuation BOS, but failed move to the upside, making this our current structural range. And what I would have preferred was to see any type of premium, but because that's not what we got, as you can see, we have leftover inefficient pricing, and it could be an area where we return to down the road, right? As you can see, it could be an area that we return to, making that a pretty much a premium return for a continuation to the downside. But because we've seen this continuation here, and what do I mean by the continuation? I pretty much am emphasizing from an M30 perspective, I'm sorry, not M30, H1 perspective, you can see that there is an internal break based on this previous low that was taken, and we eventually came to inefficient pricing, invalidation being at the high, and that caused the continuation. So when looking at continuations, right, I'm thinking low, high, low, high, low, high, low, high, low. So this is one full structural leg until preliminary structure breaks. Then I can anticipate a type of retracement, whether it's here or the inefficient pricing. The inefficient pricing would require a more so bearish break of structure, bearish change of order flow, bearish structural disruption, bearish order flow disruption for me to justify any type of continuation, even a liquidity grab, because at the end of the day, this is relative equal highs. You never know if that liquidity will be taken, given, and will give us a bearish scenario to continue lower. But at the same time, we could just come back, meet order flow, and continue lower. So as of now, the bias is officially bearish. And I don't know if you guys remember, but a couple of weeks ago we did discuss the fact that the break of this leg, which is pretty much what we have now, makes this an overall solidified high, which makes, which makes this solidified high a liquidity grab based on this previous high, which is inside of the overall bearish structural range, making this probably our next target, and then eventually leading us to the next target. So for now, we are full on bearish. Just as we had mentioned, I believe that was like a week, 2 weeks ago. But anyways, this bearish bias is now essentially shown via our other pairs now. So the AU swing POI that we mentioned, that pretty much is now a solidified low from an overall perspective, because we have just today taken out a previous high, or the major preliminary previous high. And because of that, this has now shifted the bias to the upside. As you can see from now a weekly perspective, that's a very, very strong closure. And if we're looking at our monthly, that is a very, very bullish looking scenario. And with that being said, if we continue higher, I'm now just looking for a pullback for a potential move to the upside. Of course, unless we take out our preliminary level of structure, our preliminary leg, which would be down here. But for that to happen, you would need a very strong momentum here or here to give you a shift in bias. But for the most part, right, what we had discussed on Tuesday was if, right, the structural leg was going to essentially give us a continuation. And the only way that was going to give us a continuation is if the follow through based on the inefficient pricing shown, based on the internal disruption here, or structural disruption, I'm sorry, would lead to a major break of structure. If that would have led to a major break of structure, then I now have a very valid sell potential scenario. So because that didn't happen, and now that we can study the inside of the range, right, you could see we have not a strong reaction. I would more so say just a pullback of the preliminary leg, low, high, retracement, continuation, right? But we did meet the fulfillment of the inefficiency and then caused the reaction, taking out preliminary structure. And as you can see, it tried to give a premium continuation, but unwillingness, internal break of structure based on this high. And I can show you guys with more detail if you guys don't know what I'm talking about here. Is pretty much the premium inefficient pricing led to unwillingness based on previous low. Unwillingness led to a bullish liquidity grab, leading into a discounted pricing continuation. But although that happened, right, this changes the overall scenario from bearish to bullish. So how do you capitalize on that? Well, it really just depends on when you're trading and how you're trading, because obviously this new narrative dictates bullish movement, right? You can see the character 1 and the character 2 here. And as you can see, inside of London session, we had an initial mitigation, but more importantly, oh, wrong time frame. I'm trying to find this inefficiency that I saw. Let's see. There's an inefficiency that I saw, but either way, there is still a premium, a discount, I'm sorry, inside of this previous range, right? This this discount based on the internal liquidity grab, based on the previous POI, based on the narrative built from the structural disruption, because we took out a previous low causing a bearish reaction, but that inevitably failed. Therefore, any type of position based on a discount here is a high probable scenario. And where would you take that to? From an intraday perspective, you would take that to the previous high, right? And as you can see, price was met, and that led to a previous pullback, to a following pullback, and the following pullback led to an even more clear scenario. Why? Because even if you don't catch scenario 1, which is what I just mentioned, because we have taken the overall preliminary leg from high to low, this completely changes us to a biased perspective. I mean, to a bullish bias perspective. So because we're in a bullish bias perspective, now we can look into internal structure and look for any type of reversal in terms of, no matter if you're wanting to take the bullish liquidity grab based on here and zooming in to, as you can see, a bullish liquidity grab, internal disruption on top of that based on that mitigation, liquidity grab, right? And now you could even trade based on the M1SC and with your invalidation at the bottom, which would be a relative like 2 pip stop from what I can guess. But even if you don't catch that, that's fine. This now dictates a bullish narrative. You could wait for the scalp break of structure. The scalp break of structure leads to a discounted SC. That, I'm pretty sure, yeah, as you can see, that's a candle that stands out in my opinion, because we fill inefficiency before, so mitigation 1 and mitigation 2 leads to strong bullish order flow. And that pretty much leads us to today with NFP, which pretty much solidified the shift in bias that we had mentioned based on here. So once again, cause, right? The cause, the structural disruption, the shift led to the effect, which is a very big move. As you can see, 150 pips total, and this has room. Honestly, this has room. I would love to see what happens once we come back into a potential turbulence point, just to see how we react Monday or Tuesday, and then see what we do from there, because we are looking at also a very strong daily closure. EURUSD. This is one that actually showed us bullish signs a lot faster than the other pairs, because as you guys remember, we had mentioned the potential just small retracement to the continuation. That unfortunately didn't happen, right? As you can see, the solidified high here after we took out previous low, solidified high, and this is a solidified low because this led to an internal structure break, solidified low, new into a high, preliminary structure break, solidified high, so low, high, and then the retracement, right? How would you play the retracement? Well, for one, let me actually delete all of these. Preliminary structure break, the preliminary liquidity, right? Because you have to acknowledge as well, our leg is bullish, but our internal structure is bearish. High, low, retracement, low, retracement, low, right? But this low is not a substantial new low before we created a solidified low leading to an internal liquidity grab. So now this is where we can anticipate a type of reversal. Right, so once we start zooming in, I see low, low, low being taken, and then immediately reacting from that. As soon as we react from that, right, you can see that there is an M3 inefficiency, right? Why did we reach this low? Well, as you can see, there's a ton of inefficient pricing, a move that is very fast, that shows us the narrative at play. So I know that if we break this previous low, this is my invalidation. If we break the invalidation, then the entire bias shifts. So this gives us a very important POI inside of even another important POI, which will give us a move to the upside. So there is a liquidity grab based on not only taking that previous low, but the continuation here, because as we said, this is the pullback of high, low retracement, right? And even as we're continuing lower, right? High, low, retracement, low, retracement, unwillingness, break of structure, POI, reaction, follow through. Right, all because the leg is bearish, and that leads to a bullish movement that was dictated based on the bias shift here, the internal structural range, structural leg that we mentioned. Right, so although we didn't reach our favorite POI that we had mentioned, it makes a lot of sense because the structural range was created and the liquidity grab was shown. That dictates the strong move to the upside, which is, I think it peaked out at over 100 pips. Yeah, over 100 pips. And worst case, that's a 4 to 5 pip stop. That's fine. Anyways, GU, this was a more, I would say this is a more of an ugly one. Based on, but the only thing that in my opinion came out clean was the fact that we had the potential internal disruption. But the internal disruption, although it did not come back up into the POI, it actually inevitably came down and took liquidity. Right, so keep in mind, at the time of Tuesday's Zoom, I cannot project this. It is impossible for me to just predict the price. That's not what I want to do. I want price to show a narrative, and I want to play based on the narrative because that is a controllable aspect that I can focus on. So, as you can see, right, liquidity was taken, then we gave a bullish reaction. So this POI is harder for me to justify now because there is a solidified high based on internal structure breaks and then a continuation to the low. And then this liquidity grab is actually a bullish liquidity grab because we take out the previous high, so making this a bullish bias now. So it's harder for me to justify the continuation sell here, right, because the move has already happened. The target has already been met. So that change of character, that change of bias only comes because liquidity was taken, bullish liquidity grab, and as you can see, there is a 50% inefficiency here. That dictates a bullish narrative, right? And as you can see, all we did was come back to meet inefficiency. Today, last night, right? Or tonight, a couple hours ago, I guess. And the inefficiency dictated a high probable bullish scenario because this reaction, even though it's a very hard trade to essentially get here, right? This reaction, right, it takes out preliminary structure internally. Preliminary structure break. This is a turbulence point, right? An interruption that led to the break of structure. And if you zoom out a bit, you can see that that is a valid POI, right? And if you even want more confluence, right, NFP, right, news is only an excuse for price, as we always say. But this move to the upside leaves a ton of inefficiency behind, and that is what leads to the recovery of price, and that is entry 1, entry 2, and that should continue higher because the narrative has already been painted to be up, right? And as you can see, that is a 5 pip, and here this is a 3 pip, and that's already 40-50 pips up, and it will probably continue higher just because, once again, this is also a bullish closure, right? Bullish closure. And the monthly, as you can see, looks very reject like, and we could be seeing new highs pretty much within the next couple months, maybe by the end of the year, who knows. But it's important to note as well, right, that once this leg breaks, right, this is full on bullish structure break based on the spring that we had mentioned a couple months back, right? So once this high is taken, then we know that the narrative is bullish, even though we've pretty much already known that for like the past couple of months, hence why we had been buying since down here. But with that being said, I'm gonna wrap up today's call, and I'll see you guys on Tuesday.